We want to make sure to counsel our buyers to not make any large purchases while they're going through the mortgage loan process. I know we've all either had situations where we've had clients or heard stories about clients who went out and bought a car and financed it right before closing, and that maybe messed up their ability to be approved because it hurt their credit score, or either it messed up their debt to income ratio, and therefore maybe the closing had to be delayed, or maybe they just were not able to buy a home anymore. So we all know about that. But what about a situation where the buyer wants to go out and make a large cash purchase? Let's say they want to go ahead and buy furniture. They want to pay for it with cash. Still not recommended. And I know you're thinking, well, why? What difference would that make? Well, and I've mentioned this in a lot of my other videos, but each one of the agencies, if we talk about Fannie Mae, Freddie Mac, FHA, VA, USDA, they all have their own automated underwriting system. It's called an AUS. And it's a computer algorithm that takes into consideration all the aspects of the buyer's loan application: their income, their job history, credit score, credit history, and funds they have available for closing and otherwise. So, and a part of that is the buyer's reserves. So reserves are simply money they have available to them that's left over after closing. So for instance, if the buyer's new mortgage payment is going to be $1,500, they've got enough money in the bank to have $3,000 left over after they pay everything at closing, then the system picks up that they have 2 months reserves. That means with that $3,000, they could make 2 mortgage payments if something goes wrong, job loss or something like that. And so if you have a situation where maybe the file is not as strong as some other ones, the reserves can help and might be able to allow them to get approved, whereas they otherwise may not have been able to. So if the buyer takes that $3,000 and goes and buys it and goes and buys furniture with it, instead of leaving it in the bank, now they don't have the reserves, and that could cause an issue with their final approval. And we certainly don't want to do that. So keep that in mind. Counsel your borrowers. I mean, really 2 things. They really shouldn't be making any large purchases, and they should keep their whole financial picture exactly the same as it was when they applied. And any changes they're going to be making to their financial picture, they should discuss that with their lender first. If you have any questions, feel free to reach out. Thanks for watching. See you soon.